So you have just been laid off, you're feeling stressed and overwhelmed, you're worried about how you're going to pay your bills or if you'll ever be able to afford a house again. And then you realize, hey, maybe I could get a home mortgage on unemployment. Maybe it's not too late for me. First off, it's important to know that you generally can't get a mortgage on unemployment. Wow, I'm here to tell you that it is possible, but it's not as easy as getting approved for a mortgage when you're working full time and earning a steady income. But don't worry, there are ways around this. I will show you how to get your mortgage approved and start building equity in your home again. First, you need to prove that you have enough income available right now or soon after returning to work so that the lender can feel confident that they'll be paid back with interest over time. To do this, lenders will look at your last 2 years W-2 forms and any other documentation of your income during that time period. If you're self-employed, they will want to see your last 2 years income tax returns. Next, you will also need a proof that those payments are going to continue in the future for at least 1 to 3 years. If you're applying for a home loan soon after getting a job offer, or if you've recently been laid off but have enough savings to qualify for a mortgage, then you might be able to get an FHA loan, which has a lower credit requirements than most lenders require. You can also refinance your existing mortgage if you have an FHA or a VLAM and the lender agrees. If you're looking at buying a house with a seasonal work income, then your chances of being approved for a mortgage will depend on how consistent those payments are over time. If they have been coming in steadily for at least 2 years straight, and if they're rescheduled to continue for at least 3 more years, then it's likely that your mortgage application will be approved. Finally, and this one is really cool, man, you may be able to buy a house while receiving a disability benefits, whether they come from your own long-term disability insurance policy or from Social Security. However, they must be scheduled to continue for at least 3 more years.